Hey all, welcome to ShareTreck. This is Raj here. Friends, we will start off as always with our dashboard. And I have a very focused message today. I would say that for May 22nd, 2025, which is today's date, the fear and greed index has been improving a little bit. It has come down to 66 from 69. It's still in the greed territory, but slightly lower than before. That's actually a good sign. Some cooling off here is healthy. But what's not healthy is how the markets remain elevated despite mounting economic issues. The data suggests retail investors are still dip buying, and I've got to say it's starting to feel like we are skating on thin ice. Now, my focus today is more on the bond market warning signs. Yesterday's 30-year bond auction didn't go well. That tells us something important. Investors are losing confidence in US debt. Yields on US bonds are at cycle highs. For example, 10-year treasury from US is 4.59. 30-year treasury is 5.116. Now compare that to Europe, where the 10-year bond is almost at half the yield at 2.64, and the 30-year Eurozone bond is at 3.62 as compared to 5.11 for 30-year US treasury. That's a stark gap. Investors are clearly signaling that US bonds need to pay much higher premiums to attract capital, and it's all because of ballooning deficits and Trump's massive new tax bill. This bill cuts revenue and adds trillions to the deficits. When you pair that with tariffs that are slowing the economy, the bond market kind of sees a very toxic mix out here. And think about this, the 32 trillion deficit, the debt that the US government has got already has interest at a lower rate. And when new bonds are issued to replace the old ones which are outgoing have lower interest rates and the new ones have higher interest rates. So the debt service cost is going to be significant for the US, and that could be a big drag on the ability of the government in future to do anything to help the markets, to help improve the economy. Now, let us look at the stock futures and sector outlook. Dow futures were down 0.08%, as you can see at the bottom out here. S&P futures are down. S&P futures were mildly up at 0.07%, and Nasdaq futures were mildly up 0.16. These are all pre-market actions. And I think most of the pre-market participants, we can't always rely 100% on them. So I would definitely think that once the market opens and institutions start coming in, we should see a little bit of reflection of reality. And in my view, we are approaching an inflection point. The fundamentals don't match these market levels anymore. Higher borrowing costs are going to hit companies, especially those with weaker balance sheet. But I do expect the Magnificent Seven, those with strong cash position, to hold up much better. When I say to hold up much better, I'm saying these companies can weather higher interest rate without needing to borrow. They won't escape the storm, but while they go down, they will not go down as much as companies that do not have much cash in their balance sheet and have a need to borrow. And also these cash-rich companies which usually do stock buyback may not want to do stock buyback in case they need the money. And in case they don't need the money, they would do even better if they do the stock buyback at lower levels. So another thing I'm noticing is, interestingly, Bitcoin has rallied above 111,000, suggesting it's being rightly or wrongly seen as a store of value. It's technically overbought, but it's holding firm. Whereas if you look at gold is near all-time highs, with RSI still giving it plenty of room to climb. The bullish trend in gold still remains intact. So I'm thinking that I would watch gold and Bitcoin carefully. My IBIT holdings, I sold half of that, booked profit, and the other half is still with me, and it's going up. It's got a lot more profit than what I booked in the first 50. So I'm going to watch this very closely for today, and it will be really surprising and nice if Bitcoin was able to become a store of value. And that will be one more asset class available. Now look at the layoffs and the housing outlook. The US companies have started announcing layoffs, and that's not great for consumer sentiment. And it certainly won't help the housing market, which I think will continue to struggle under the weight of high mortgage rates because of higher yields and tighter credit. And that will bring down the whole market. As I mentioned before, if the housing market has higher interest rates and is sluggish, then the house prices are going to be low. As a result, people borrowing against their house using line of credit to buy big ticket items like cars, washing machines, and doing home renovations, all of that is going to come under pressure. So that could also impact the GDP overall. We are seeing cracks form in bonds, in consumer sentiment, and in corporate balance sheet. And this is a market living on fumes, in my opinion. And I still remain bearish. Retail investors are propping things up by buying the dip, but the big money is quietly stepping aside. And I think this is what is happening in the market. With this background, let's go and have a quick look at the way TradingView platform shows the price action shaping up. So let's go to the TradingView platform now. Takes me a few seconds to just move across. And here we are in the TradingView platform. And I'm going to go into the futures and look at S&P 500 futures. And I want to take a quick look at the comment section and see if anybody, thanks, Hot Dog. So I just wanted to check out the comments and also to see if the volume is coming through. I think that's a good practice to do that periodically. Okay, so here we are in our S&P 500 futures. And as you can see, we have a mild negative out here. And with S&P, with NASDAQ futures, we have a mild positive. Both of these, I think, are subject to change when the market opens. I'm thinking that we are still in the bull flag area, but if we fall down below this minor line of support at 5835 for S&P 500, I think we'll be in a bearish territory. We'll have to watch that very carefully today. MACD is ready to go onto the bearish side. Momentum has dropped and is flat. So there's a possibility that we may make this transition down. Whereas NASDAQ is concerned, it's much more stronger than S&P 500. It continues to have a resistance at 21306.00. But my point in the sand, my line in the sand for NASDAQ is around 20,664.75. If we fall below that, then I think that we'll become bearish out here. But if S&P 500 falls down and starts being bearish, NASDAQ cannot be too far behind. So S&P 500 might lead the way out here. And for today, I think our support is going to be somewhere around 20,787.25 for NASDAQ. And resistance for NASDAQ is around 21,287.25. When you look at S&P 500, our resistance continues to be 5998.25 and the support continues to be 5831.75. And we look at dollar index, which is coming down towards its support, which is at 99.294 and resistance, which is at 100.902. This morning, we are up mildly out there. When you look at the 10-year yield, it's moving towards our target of around 4.750. And if you look at the 20-year yield, it has already crossed our targets, and our resistance at 5.06 has now become a support, and we are already at 5.15. And the 30-year yield has also crossed our target, and we are at around 5.139 or around 5.14%. So things are not looking that great. And let's go on and have a look at the indicators themselves. And for S&P 500 today, our resistance is going to be 5884.50 and our support is going to be 5834.71 and our ultimate line of support is going to be at 5772.42 if a sell-off happens. And if it accelerates, then I think for today, 5708.16 could probably be the last point of support. And it should hold up before on top of that. I'm coming all the way down here because we have a gap up which happened, which needs to be filled. And if the market decides to fill it up today, and that's the area where I think we might probably find some support. Nasdaq Nasdaq is finding this area of selling to be a factor that is pushing it down, and that's going to be continuing to be a resistance for us today at 21,255 all the way up to 21,389.90, and our support is going to be at 20,833.16, which is a minor line of support. If we fall down below this, then we are coming all the way to 20,339.28 in order to do a gap fill out here with a little more downside the following day. I'm not expecting the markets to crash like that, but I'm giving you this huge range out here because MACD is ready to go to the bearish side. Momentum is also dropping sharply, even though it is above average. And our VIX has got elevated by 2.40% and it's at 21.36. And when we have these jumps, they happen very fast and the way down is slow. So we are going up fast and coming down much slowly. And we could have one of these fast jumps that could happen when the market opens. And this small green candle could essentially have the potential to become a large green candle going all the way to 28.36. We'll have to see what happens when the market opens, what kind of catalysts come in the market. If you look at gold, as I was saying, it's got plenty of room on the RSI to go up, and the MACD is also improving, moving towards the signal line to cross over to the bullish side. We have a resistance at 3,428.90, and we have a support today, which is at 3,215.78. So that said, I want to go on and have a look at AI stocks that we have out here. NVDA has got resistance today at around 139.91 pre-market. It's showing a little bit of promise. It's up 0.24% and it's quoting at 132.13. I have sold most of my NVIDIA. I have 5 calls, covered calls at 28.5. Which I'm going to let it mature, and maybe I might lose the shares or maybe not. So I'm holding on to that. I had even more NVIDIA shares, so I just got around 100 shares remaining out of around 1,200 that I had. So I have a total of around 600 shares. I may decide to sell the last 100 because the other 500 are spoken for in the covered call at 28.5 strike price. So if I'm lucky today, I might end up selling the 100 at somewhere at a high level. And then the remaining 50, I'm expecting, which are going to be expiring on 30th, to come off the market, and I'll still hold the stocks because I'm thinking the chances of NVIDIA staying above our level of support at 128.66 is very slim when we look at 30th of May. So that's what I have for you, my friends, here today. We look at Meta. Meta is up 0.22%. Support continues to be at 629.99. Right now in pre-market, we are at 636.90. Resistance at 655.99. And our MACD is moving towards the signal line. Momentum is above average, but it's descending. So the energy is getting out of the Meta stock slowly. And if you look at Google, Google is still looking strong. It's up 0.89%. RSI has plenty of room and momentum is picking up. I do regret selling off a lot of my Google. I still have some more Google left. I have to decide whether I'm selling it all today or going to sell up 100 at a time. So that's what I have been doing on the Canadian side. And I still have a few hundreds of Googles left, and I'm going to sell them off today, 100 at a time, so that I can dollar cost sell it on the way out. Now, if I look at the MACD, it's looking good. Momentum is also looking good. If you recollect, Google has the most attractive valuation. So it's trying to gather some more value out there. But at the end of the day, I think overall environment is bad with the tariff and the bond situation and the debt situation and the impending budget bill, which is going to go to the Senate somewhere in August. So we'll have a slow burn. The market might forget some of these things with the budget and the potential tax cuts and the huge deficits. We'll be looking at the debt ceiling drama coming up soon. So all of those will happen. The market has a short memory. So there is still a potential that we may see a bull flag and then we may go up further before we come down. But I'm having a very low risk threshold as a retiree. So I have started staying in cash for the most part. Now go on to Amazon. Amazon is up 0.17%, and we are looking at support for Amazon at 195.74. Right now we are at 201.40, which is just below this diagonal line of support. So this diagonal line of support has become the first resistance for today. And for today, it's going to be at 201.89. And the next level of resistance is going to be 208.05. So that's the range for Amazon. Amazon is looking weak on the charts. Momentum is dropping significantly, though above average. MACD is ready to move over to the bearish side on top of the signal line. I think that could happen either today or tomorrow. Apple is down 0.48%, looking very weak indeed. MACD is almost ready to cross over the signal line to the bearish side. Momentum is below average, and friends, our minor line of resistance at 203.38 is going to be the resistance for today. Our previous supports have all become resistance, and our support is going to be at around 199.36. This is the line which I'm going to mark as a support. And we are somewhere in between these two out here. And today I am thinking that Apple is going to give up more value. Microsoft is also on its way down. It's down 0.35% in pre-market trades. Resistance is going to be at 454.39. I'm going to mark this red. And support is going to be at 448.20. Pre-market, we are at 451.00. Let's go on to Tesla. Tesla is down 0.78% in the pre-market trades, and support continues to be at 329.16. Resistance is at 561.49. And if we fall below this, then we have support at around 298.13. Oracle is down. Let me wait for the chart to load up. Oracle is down 0.24% in the pre-market trades. It's at 156.81. And we had a support at 157.02, which now becomes a resistance for today. And our support for today is going to be 150.49. Our momentum is dropping. MACD is also moving towards the signal line, ready to cross over to the bearish side. So I think overall trend for Oracle is down today. AMD is down a further 0.23% in pre-market trades. It's at 111.84, which is somewhere out here. And therefore, our minor line of resistance is going to be at 114.71. A minor level of support at 107.92. And further, if we drop down further, our support at 102.52 might click in. Our momentum is dropping, and MACD is also becoming less and less bullish, moving to the bearish side. And you have SMCI, which has lost 0.26 in the pre-morning session. It's at 41.54, which is somewhere out here in between these two lines. So this line of support from yesterday at 42.80 is becoming a resistance today. And we have minor line of support at 39.17, followed by a proper support at 34.81. Momentum has already dropped significantly and continues to drop further. MACD is most likely to cross over to the bearish side later on today. And we look at Broadcom, which is down 0.92%. It will have support today at 227.29. Right now, pre-market, it's at 227.91. Our resistance is going to be 236.64. Maybe at the end of the day, our support of 227.29 might end up becoming a resistance. And we'll also have support at 219.19, which is a minor line of support for Broadcom today. Hopefully, we stay at that level. We have a gap fill to be made, which is going to attract the price downwards. Our momentum is very elevated. It's just about overbought, and it's dropping a little bit. And MACD is ready to move over to the bearish side. So overall, I am thinking that we are likely to see a little bit of consolidation or a drop in the price for Broadcom. Palantir is up 0.39%. It's still got a resistance at 124.38, which was a support yesterday. And it has got a support at this minor line of support at 108.43. That's going to be the support for today. And we can see that our MACD is already bearish and momentum has already dropped. It's almost close to above average. But if you watch what happens overall in the market, I think that Palantir, even though it's showing a lot of promise in the morning with a gain of 0.38% in the pre-market session, it's likely to lose value. And I wouldn't touch Palantir at this point of time. I'm very cautious out there. SMH semiconductor ETF is down 0.17% in pre-market trades, resistance at 245.62. Presently, we are at 241.05, which is somewhere out here. And I'm thinking that our minor line of support at 233.03 will be the support today. And we have heavy momentum, but it's dropping fast. And MACD is moving towards the signal line to cross over to the bearish side. Tempus is down 0.45%, and our very strong support, which I said would be at 59.65, has become bearish. So I'm going to mark both the diagonal line as well as the horizontal line of support as resistance. And today, I think our minor line of resistance for Tempus AI is going to be in this region. I think it's pretty strong in the sense that it has had a whole lot of touch-ups by the price line the last few days. As always, our convention is to mark that orange. So that's a minor line of support for today. Momentum is already at below average, and MACD is already turned bearish. So it's time to probably short Tempus AI and start booking profits on the other way around. And I might look forward to see a reverse head and shoulders forming. We'll have to watch out for that. And if I forget, please put it in the comment section so that I remember to check that out. So that, my friends, brings me to an end of today's session. I'm going to quickly take a look at the chat area and see what's happening out there. And good morning, Inf. And I think you're agreeing with what I'm saying out here. Labor Day data and PMI today. I've stopped watching the economic news because this market seems to be in some kind of trance. All our retail investors seem to be buying the dip. There's so much of mess underneath, and nobody's looking at that. I have already sold most, and I'm continuing to be bearish. I may have egg on my face, but I don't know. That's what I feel. Thanks a lot, Inf, and thanks a lot, Hot Dog. Thanks for tuning in. I'll catch up with you again in the next video tomorrow, and off to my breakfast. Bye for now, and Hot Dog, have a nice day. And